And now for more insights, let's cross over to Jack Barton live in Brussels right now. Hi there, Jack. So the EU's new banking rules have sparked a lot of market volatility. What has been the response of these European finance ministers so far?
Well, the fact that they were talking about it is clearly an indication of how alarmed they are, because they were supposed to be talking purely about the progress or lack of it of Greece's current bailout at Thursday's meeting. But with the stock 600 Europe Bank Index falling to the lowest level since the height of the crisis here in Europe in 2012, it clearly dominated discussions. But the key message, as you mentioned, was don't panic. Jeroen Dijsselbloem, the Eurogroup president, said it was an exaggeration. But not all of the ministers dismissed the link between the new banking rules and the volatility. Dijsselbloem himself said there were still legacy issues. It was to be expected that there would be some repricing with those the new rules coming in. New rules which shift the focus away from taxpayers if a bank collapses with a bailout towards share and bond holders, as well as people with large accounts now being required to have a bail-in. So some of them did acknowledge that link. They said the repricing is normal, but the fundamental message was don't panic, let the dust settle. The banks now have enough capital under the new rules. They're not going to collapse.
Right. And regardless what these European finance ministers are saying, many people in the U.S. are actually more worried because they think that U.S. Financial institutions, having gone through the 2008 financial crisis, are actually better equipped to deal with a crisis of this magnitude compared to their European counterparts. But let's talk about the bank that we need to worry about. A lot of people have compared Deutsche Bank to America's Lehman Brothers, saying that this is probably going to trigger a continent-wide crisis from here on, given that Deutsche Bank's losses have been substantive so far. Tell us more.
Absolutely, and you're right as well. You know, the US really stepped in quickly, cleaned up the banks after the crisis. Europe didn't. It still has so many non-performing loans on the books, and the big concern right now is Deutsche Bank. It's not just any bank. This is Europe's largest financial institution. It does do some retail banking, but what it's really known for, of course, is funding German business and industry. It's the backbone of the German economy. So if that bank collapses, it's really in trouble. And the share price has been in free fall. Over the past month, it's gone from around 21 euros down to, last time I checked this morning, about 13. So it's almost halved. And if we look at the financial instruments that bondholders use to protect their investments against default, well, they're trading at prices that indicate they're certainly expecting that bank might collapse. But again, the messages we're getting from Wolfgang Schäuble, the German finance minister, is it has enough capital under the new rules. The buffer is there. It doesn't need to worry, even if the share falls lower. And that is the message we're also getting from the bank. But it puts the German government in a real bind. If it does look like it's in trouble, they, of course, want to step in and give it a bailout, but they've been telling Greece and Portugal, other countries, they can't do that. So if they do, it could set off economic troubles as well as a huge political row across Europe.
That's true, but if we learn anything from the 2008 crisis, they probably should have bailed Lehman out. So we'll watch and see what happens over there. Thank you for the update, Jack Barton, live for us in Brussels.